In our trader rundown today, I am joined by Dan Deming of KKM Financial. And Dan, after the wild rock and roll week we had with the market last week, are we in for more of the same this week?
Probably not quite as dramatic as we saw last week, but still I expect volatility to be elevated as we filter through the changes. And when you talk about the changes, we're talking about the changes in some of the, not only equity repositioning, but also asset class repositioning.
The rotation has been unreal. Something that I'm noticing is that people started to back off the big caps and are now moving into the small caps, such as the Russell.
Well, you're in certain areas, that's definitely
especially
the case.
With tech, unless it's a bank.
There you go. So you got the industrials which are benefiting from the perceived infrastructure activity moving forward.
Sure.
Your banks are benefiting not only from what they perceive as a lower regulatory environment, as well as interest rate increase in interest rate environment. So you're seeing those two sectors really outperform. But like you said, technology coming under a little pressure because of what's going to happen with the repatriation. And you're talking about the Russell. Wow. Small caps, because again,
100-point move we saw last week.
Dramatic moves. So
we haven't seen that in 5 years.
I know. Yeah. I mean, and then you look at the bond market too. Some of the price movement in the bond market has just been historic in nature.
So what do you think will happen from here? Because some people are saying the moves happen too fast.
Well, this is it feels like a knee-jerk reaction to some degree. And so we saw Friday the market give up a little bit of ground, Angie, so we'll see how that plays out this week. We went up and tested some key levels here. Now when you look at the Dow, and of course that's industrial, strongly lean towards the industrial sector, that went to new highs, all-time highs last week. Now the S&P did not, and so I think that's one thing when you look at the S&P 2190, didn't break through there. So again, I want to hold that 50-day moving average on the S&P right around the 2145 level.
Any sectors that you would be buying or staying away from?
Well,
or do you follow the tape?
I think if the theme continues to play out, that you probably do follow the tape, because if we do continue to see this interest rate environment shifting more towards higher rates, then the banks should continue to benefit from that because they were so depressed for so many years. So I think that's a potential area that's still going to maintain some strength. The industrial sector, we'll see if these infrastructure plays actually manifest themselves. If they do, then possibly there. But overall, it feels like the market has in the position here where it could, if they feel that some of these initiatives are going to come off the board and actually get implemented, that there's going to be some stimulus there and the market's going to benefit from that.
Thank you, and we will stay on our toes.
We will. Thanks, Angie. Thanks for having me.